This is how I'd start investing today if I was a beginner. Just remember that this video is general in nature and doesn't constitute personal financial advice. You can read my full financial services guide in my description. So the first thing I do is set up an emergency fund. An emergency fund is 3 to 6 months of living expenses saved in cash in a bank account. And this is so that you have a bit of a buffer just in case something happens in your life. For example, if you lose your job or if any unexpected emergencies pop up. And you can use this money to rely on without having to take money out of your investments at a bad time in the market. I know that 3 to 6 months of living expenses is quite a lot of money to save up, but you can always start small and start building it up over time. You could start with an emergency starter fund of $1,000 and then work your way up from there. I personally store my emergency fund in a high interest savings account with UBank. They're currently offering a 5% interest rate, and the only requirement is depositing $200 per month into your account. And if you'd like to try UBank for yourself, you can use my code Queenie30 for $30. So the next step is to pick an investing app. So many people get stuck on this point, and I understand why, because there are so many different apps to choose from. But lucky for you, I've actually created this completely free investing cheat sheet. And if you scroll down, I've actually compared a few different investing apps in Australia, and I've compared them against their fees, whether or not they have an auto invest feature, whether they're CHESS sponsored, and the different markets that you can access through these investing apps. And if you'd like to check out this investing cheat sheet for yourself, you can download this free investing cheat sheet down in the description below. Personally, I think that it doesn't really matter a whole lot which investing app you do end up choosing at the end of the day, as long as it does have affordable brokerage fees. And if you do prefer security with your exchange, then potentially look at a CHESS sponsored broker, which means that if you buy shares on the Australian Stock Exchange, then your shares will be held in your own holder identification number. This just makes it a little bit easier to claim ownership of your shares because they will be registered in your own holder identification number. So the next step is to open an investing account. I personally like using Pearler, but there are many different apps out there, each with pros and cons. So I do encourage you to perhaps even download a few different investing apps and see which one works for you. It is completely free to open an account at the end of the day. And if you don't like the investing app that you start with, you can always change it. So the next step is to decide what type of investments you would like to buy. There are two main investments that people make. There are defensive investments like cash and fixed interest. And these investments are usually low risk, low return and suit people with a short time frame of 0 to 3 years. And on the other hand, there are growth investments, which include things like property, shares and ETFs. These investments are higher risk, but also provide the potential for higher returns. And they suit investors with a time frame of at least 5 years or more. And the reason why they suit investors with a time frame of at least 5 years or more is because their prices can be a little bit like a roller coaster in the short term. But over the long term of at least 5 years or more, they do tend to perform really well. With an investing app, you can choose to buy individual companies, or you could even buy something like an ETF. An ETF is essentially a basket of different shares in one investment. A lot of people, myself included, do like to purchase ETFs because they tend to be less risky than purchasing individual stocks. And let me show you why. As you can see in the stock price of Tesla, it has had some really dramatic highs and lows. As you can see in the stock price of this ETF, there definitely have been some highs and lows over the past 5 years, but they haven't been as dramatic as the Tesla stock example. And here's a list of the top 5 ETFs people buy with Pearler. Number 5 is IVV, which is an ETF that tracks the top 500 companies in the US. 4 is A200, which is an ETF that tracks the top 200 companies on the Australian stock market. 3 is VDHG, which is an ETF that allows you to invest in 90% growth investments and 10% income producing investments. 2 is VGS, which tracks the top 1,500 companies worldwide from developed countries including the US, Japan and the UK, but excluding Australia. And number 1 is VAS, which tracks the top 300 companies on the Australian stock market. The next step is to deposit some money into your account, and I'll show you how. So I just go into the Pearler app and then I scroll down to AU Cash and then I click on deposit. I just click on deposit directly, and here it will give me an option to pay using my Pay ID or to pay using a BSP and an account number. So I simply copy my Pay ID and then I go onto my bank account app. I paste in the Pay ID Then I choose how much I would like to deposit, for example, $500. And then I just click on send money. And if you're enjoying this video so far, don't forget to give this video a like and subscribe to this YouTube channel. As you can see, the money has now landed in my account, and now I can show you how to make an investment. So I simply click here, invest in AU shares. I can search for the ETF or stock I would like to buy, for example, IVV. Here it gives me more information about this ETF. And then to purchase it, I simply click on buy. I can choose how much I would like to invest, for example, $500. And then I simply click on next and confirm. And there you have it. I made an investment from my phone and it literally only took a couple of minutes. And if you'd like to try Pearler for yourself, you can use my code Queenie for a $20 credit. So now that I've showed you how to make an investment, I'm going to show you how to set up automated investments. And this is something that I personally do, so I don't have to worry about my investing and it automatically happens every single month. It also helps me ensure that I am staying consistent with my investing goals. So to set up an automated investment, I simply go on to automate. I click on add. Here I can choose from a couple of different options, but I simply click on recurring deposit and I select the next option. And then I simply click on next. Here it allows me to set up my recurring deposits. So I simply put in how much I would like to invest, for example, $1,000 every month. And then I click on continue. Now that I've set up my recurring deposits, I need to put in which shares or ETFs I would like to invest in each month. As you can see, I've set my auto invest portfolio to invest in 2 different ETFs. 62% is in VTS and the other 38% is in VEU. If I'd like to edit these targets, I can simply click on edit targets, and here I can choose how much I would like to invest in some different ETFs. And then when I'm finished, I simply click on save. Some popular ETF pairs are VAS and VGS, and a popular ethical combo is FAIR and VESG. And since I've had this automation set up for a couple of months now, if I go into my transaction history, you can see in my transactions that every month some money gets deposited into my account, and you can see from this graph my wealth has increased quite a bit over these past couple of years. So once you do start to make some investments in ETFs or shares, the next step is to start tracking your investments so that you can start to see how your portfolio is performing overall, and also so you can keep track of your taxes. When you sell a share or an ETF for a profit, then you do need to pay capital gains tax on the profit that you made. So let's say, for example, you purchase an ETF for $10 and then you sell that same ETF for $20. That means that you'll make a capital gain of $10, and this will get added into your tax return as income and then will be taxed at your marginal tax rate. If you're just holding on to your investments and you're not selling any of your shares or ETFs, then you don't need to pay capital gains tax. However, another thing to be mindful of is some shares or ETFs do pay dividends. Dividends are essentially the profits that some companies decide to distribute to their shareholders. Most ETFs or shares pay dividends between 1% to 5% per year. These dividends do need to be added into your tax return as income, and then they will be taxed at your marginal tax rate. I know this can be confusing and overwhelming, but I do have a really handy tool that can help you with your taxes when you are investing in the share market. And this tool is called ShareSite. And if you'd like to try ShareSite for yourself, you can use my link below. ShareSite is completely free for up to 10 holdings, and it does integrate with a lot of investing apps and brokers, including Pearler. So this is what ShareSite looks like. As you can see, I have connected all of my different investments and ETFs. I do have investments in a couple of different brokers, but the thing that I like about ShareSite is it can integrate all of these different brokers into the one place. So I can see my full portfolio in the one place. Here it shows me my total return over the past year and also how many dividends I've received. So this just makes it really easy, especially when it comes to tax time, because all I need to do is to go into ShareSite and then download some tax reports and send them off to my accountant. Write me a comment below with the word blueberry in it, just so we know you watched this video all the way through. Thank you.